I believe so passionately in this. I have for years. I've told you, Rob, like over the, like all through my career at conferences, or even just, in the makeup room, say, at CNBC or Fox where I've worked, I'd have makeup artists say to me, what do I do? How do I do this? Like, what does this mean? Where do I start? And so hopefully this is a way for people to get started, because I really feel like you need to roll up your sleeves and have some ownership of this yourself.
I agree. And I think, the industry, the financial services industry or the asset management industry isn't necessarily inclined to make it that easy for individuals to kind of do it themselves, right? Because they want to do it for you. They want to collect fees and be
there's
paid
fees everywhere.
to wade through the
Not with us,
confusion.
by the way. It's very transparent. That's actually it's one of the cool things that we're doing, because you pay your $9.95 or you pay your portfolio fee, and that's like it. So our only incentive is to provide you the best possible research. We're not incentivized to send you into this or that product, because there's, it's just to have the very best research possible to make you the most money.
Yeah. And the last thing we want is to have lousy research or lousy ideas that don't work, right? I mean, that doesn't help us. That doesn't help our subscribers.
The pressure's on.
The pressure, on, you know what? Still. When you're an investor, the pressure is always on, right? I mean, it's always about looking at, what are the opportunities, what are the risks. It's a competitive game, but it's fun, and we have fun with it.
One of the things I hope we should maybe next week we can talk about this. I'll just allude to this right now, because as you and I were talking this week, you made a very good point. You said something about how people will be in the grocery store and they'll be weighing this can of tuna fish versus this can of tuna fish and saying, okay, well, what is the price per unit? And I have a little savings on this one. And the truth is, like, that's all fine. But can you take that strategy and actually put it into your portfolio and start looking at what you're doing and what you're in with the same kind of enthusiasm? And I think it's hard for people, because the industry, as we've said, doesn't really set itself up as being user-friendly.
Yeah, it's hard for people. And I think, it's somewhat intimidating. It takes a lot of mental energy. It does take some commitment, and you have to read and you have to research. I think my suggestion would be, think about your return on time invested. Your return on time invested is so much higher if you're thinking about your portfolio and managing your investments and thinking about your tax implications of your investments and getting smart on that stuff, rather than some of the other uses of time that you might have, like, that example of being in the supermarket and struggling over, trying to save 10 cents on a can of beans. I don't know how many people are really doing that, and usually the people who are investors are the same people who are, analyzing the different costs of the can of beans, but just because they're in the mindset. But, you want to get in that mindset, right? You want to get in that mindset of really kind of being thoughtful and careful.
I was explaining this to one of my kids the other day, because my son is angling for the new iPhone, the iPhone 16. And, he's like, I can turn my iPhone 15 in and get the 650. And we had a discussion about, okay, so what is still the outlying cost? If it's $600, is it really $600? Because guess what? If you put that money in the market instead, and you left you made do with the iPhone 15, tough life you got, kid. Hey, you know what? That over time, that compound interest, that adds up. And so really the cost of that iPhone is not $600. It's many, many multiples of that. It's thousands of dollars. And I think if you start sort of training yourself, and I'm trying to train my kids to think that way, then that ultimately is going to pay off in spades.
Yeah. And, at some point, there's so much psychology and that goes into investing and to, building up like kind of the discipline and the thought patterns that you need to kind of do well as an investor. So, we'll definitely have to return to that topic, because that's like an infinitely fertile area of discussion.
For sure. And I think something that people are still hungry to hear is our friend Peace of Mind says, compound interest is a real thing. Indeed, this is I'm telling the kids, why don't they actually teach real home economics? I'd like to know in school these days. I mean, You get some older kids than me. Like, are they actually teaching home economics? Like, okay, credit card, mortgage, the cost of capital, compound interest. I don't think anybody teaches that. And it's weird that they don't.
No, it's like a survival. In the 21st century, it's a survival skill at this point, right? And it's really to the benefit of the entire country that we have a citizenry that can navigate these issues, that understands, don't load up on credit card debt and pay 24% interest rates. That's not going to be a recipe for.
I mean, you think about that, right? Like if you're paying 24% interest rate, I mean, wow, here I am just trying to, tell my son, hey, you don't want to do the cash expenditure because the compound interest value on that $600, you think you're getting a deal on for the phone is actually, it's costing you so much more. And then you think about, people taking on credit card debt, et cetera, and it's so much a part, unfortunately, of our society. And I also think that they're preying sort of in some ways on this naivete. The industry itself preys on the naivete, the financial industry itself, and even the people that are trying to help you and the brokers, et cetera, but then obviously the credit card companies, et cetera. And we're not, as a society, I'm going real big picture here, doing enough to equip kids with a better sort of fact set.
Yeah, I mean, if you want to have a free capitalist system, you need a citizenry that's basically competent and educated and can function, and won't fall into all of the traps and be taken advantage of. And I think there's a lot of doubts, at least on my end, that we're equipping our kids in that way. I mean, some people are, but some people aren't. So
we have a lot of gold bugs here. MJ Smith says MJ's out buying gold every time. They're going to Costco. So James pointing out that we need to get the libs out of the schools. Maybe then we can teach some real home economics. Forget about the cookies. I'm sorry. I mean, the cookies are great, but you know what? Let's talk about real economics, and let's talk about home economics as it relates to how we invest and how we plan our futures. It's great to see you guys. It's so wonderful. I mean, this is a very tiny channel that Rob and I have. So many of you have come over from the Trish Regan show, and I so appreciate it. Do us this favor. Make sure you subscribe here on 76 Research as well. Subscribe to the show and hit the bell so that you know when we're here, when we're live. We're going to have a lot of content coming out for you over the weekend. Go to the website, 76research.com, 76research.com. Try to get those model portfolios. I'm telling you, if you can, if you can do it, you really ought to be taking a look. Lots of different opportunities there for you. Thank you so much for tuning in, everyone. Have a wonderful weekend. Rob, always a pleasure to see you. We'll talk some more, and we'll see you guys right back here.